The world is all about growth and reinvestment and continuously keeping that money supply going.
The stock market, Bitcoin, and gold all hitting new highs this summer.
Bank of America, Goldman Sachs are forecasting $4,000.
But that growth is far from over.
It is ramping up to be a very significant gold producer.
Ryan King with Equinox Gold breaks down a more than $2 billion merger that's opening up a significant growth window for investors.
Very interesting, compelling opportunity right now because of the new assets coming online.
Will gold mining stocks be the next catalyst for your portfolio? Ryan, so great to have you on for this special week of MarketBeat in the mountains, talking about a really fitting subject for the setting, and that's gold mining, one of the hottest investments of the year. And through all of this sector growth, one company has instantly added another roughly $2.5 billion in market cap, thanks to this really impressive merger that has now created one of the largest gold mining companies in North America. Walk us through those details.
Yeah, no, absolutely. I mean, the merger you're referring to is Equinox Gold has strategically now acquired all of Calibre Mining. So these are two quite significant gold producers in the Americas. And yeah, to your point, on the back of this merger, as it's been closed now for a couple of weeks, next year, this company should be one of the largest gold producers in Canada, if not the second largest gold producer in the country, and that's largely driven by two cornerstone assets that are coming online and ramping up. And I'll give you one example: is the mine in Ontario. It's called Greenstone. It is ramping up to be a very significant gold producer, probably in the range of 300 to 350,000 ounces of gold a year from that single asset. And the second asset that is just to become into production here is called the Valentine Gold Mine in Newfoundland, and first gold is expected there by the end of the third quarter. So as you can see, next year at an annualized run rate, we should be at a very significant outlook for the two mines together, combined with all the other assets, probably north of 1 million ounce a year gold producer.
That's incredibly valuable with today's historically high gold prices. That 1 million ounces is worth over $3 billion a year. So, huge number for your company. And Ryan, I know you're the expert. You've been in this industry for a long time. But from the outside looking in, gold has had such a wild year. I'm really curious what's behind all of this growth? Why are we seeing so much investment in gold right now?
Well, you bring up some very good points there. It's nice to be able to have these key assets ramping up in this very robust time for the gold price. And gold is currently trading around $3,300 an ounce USD. I would say that a lot of these safe haven assets are catching up. They're having a bit of a catch-up trade. You look at Bitcoin, for example, it's hitting all-time highs or close to all-time highs. And you look at the price of gold, it's hitting close to the all-time highs. And a lot of that is driven by central banks around the world accumulating physical gold. And why are they doing that? And I can't really tell you exactly why, but a lot of it has to do with debt levels around the world, geopolitical activities around the world. And I think there was a significant point in time here back in 2022 when the United States sanctioned treasuries in Russian central banks. That really, I think, had a very significant impact for a lot of other central bankers around the world. And the reason is that could this happen to me next? Could this happen to us next? So therefore, wanting to own a physical asset like gold that is not connected to any particular government. So I think that if you look back in time, that's really been a point where the price of gold has outperformed a lot of other asset classes.
Yeah, it really is quite impressive how much gold has risen in such a short amount of time. I think some investors are a little wary of this if they've not been in gold before, thinking about adding it new simply because it is so high right now. I know it's had a little bit of a pullback in July from June, but still very near those all-time highs.
Yep.
How much higher can gold go? I think that's the question a lot of retail investors have right now.
I mean, obviously a good question. And I think if a lot of us had a crystal ball here, that help forecasting a little bit. But look, I believe that there is a very constructive play working out here. And the longer we stay at this kind of $3,000 to $3,300 price environment, the more opportunity I think that will be to go to the upside. I mean, for example, CIBC has recently put out a price target of $3,600 an ounce to the end of the year. Bank of America, Goldman Sachs are forecasting $4,000 per ounce. And again, a lot of this has to do with uncertainties globally. Tariffs, for example, de-dollarization, for example, and a lot of these activities are unraveling right now, which are leading to more investors and more central banks wanting to own the safe haven assets. So I think that just presents a compelling opportunity for, I'll call it, stronger for longer in the gold price environment.
I think it's important for investors to remember to follow where the investment is going. And we talk a lot on this channel about increased investment in defense spending and following those stocks that are getting those kinds of investments right now, increased spending on AI and following those stocks that are getting that kind of investment. But you can't forget about where the banks are putting their money. And right now, it seems that banks are very much across the board moving to gold right now. So it's important to remember that fact as well. I want to talk about what that investment from a lot of these central banks, them moving to gold, what does that mean for your company?
Well, very positive, obviously. We're price takers in this environment. And so in this sector, we're price takers. So as of right now, with a 3,000 plus dollar gold price environment, and if you take 2026, for example, just as give you an example, and when we look at, this is not guidance, but when you look at the quality of the asset we have in the portfolio, and we say, if you bucket each one of the different regions where we produce, this is roughly going to be around 950 to 1.1 million ounce a year gold producer in 2026 beyond. So an exciting time for the business as these two companies have come together to create this major gold producer. So we look at our business and we say probably next year we're going to produce gold for about $1,600 to $1,700 an ounce. And now let's be a little bit conservative and just say $1,700 an ounce. Our operating cash flow in that price environment is about 1.3 at a million ounces a year is about $1.3 billion of operating cash flow. Now, the company does have debt, and the focus of the company is to delever and then quickly look at getting ourselves in a position of returning capital to shareholders. So I think this is presenting a very compelling inflection point as we ramp up these mines, but also at this high gold price environment, put ourselves in a position to delever and then return capital to shareholders. So it is significant for gold producers in this environment. I believe for investors, they want to see this price environment kind of stay here. It is volatile. We understand that, of course, and it has been, if you look over time, like 10, 20, 30 years, gold has been one of the safest, one of the strongest return on investments over long periods of time. So I believe that it's probably in time only going to get stronger. We're not, inflation isn't going away, and the value of our dollar spending in day-to-day life is not going down. Things aren't getting cheaper. So, again, kind of points to that devaluation of currencies and then valuing these safe haven assets. So I think it's a very interesting time to be looking at gold, gold equities, these types of products to protect our portfolios.
Even this year, we've heard from retail investors on the channel saying, oh, gold can't possibly go up higher. It's going to go down. This is a bubble. It's going to burst. And yet we've continued to see gold go up this year. I think looking at where gold started at the start of 2025 to where it is now halfway through the year,
Yeah.
there's been a tremendous amount of growth. And so it does make you think that trend is going to continue. Let's talk a little bit more about why investors should also look at having gold mining stocks, whether it's not just owning gold itself, but
Mhm.
gold mining stocks like your own, and how those can be a really good way to diversify your portfolio.
If you believe in the price of gold, if you believe in that environment, you want to look at companies specific to that sector, right? And you want to look for opportunities where, if somebody, let's say five companies are producing 500,000 ounces a year of gold, four of those companies have had a return so far year to date of say 30, 40%. And that's been the case. And then you look at an Equinox Gold because of the merger and then coming out of the end of that merger and then building a company from those two companies coming together, it has not had the same return as investors. So you want to look for quality companies within a sector that you believe has opportunity to go higher or, over time deliver on those expectations. And I think there's a lot in this conversation that probably needs to be deconstructed. But my point is that gold equities make sense if you believe the price of gold is going higher or staying within that price environment that it's currently trading at. And then you want to be company specific and looking for those opportunities where somebody has underperformed. And why is that the case? And then what are the opportunities going forward for that said company? So yeah, that's why I think Equinox is a very interesting, compelling opportunity right now because of the inflection point of the new assets coming online, which could lower our operating costs and give us better exposure, more leverage to the price of gold.
Yeah, I want to talk about with gold mining companies like yours, how much of a movement do you see in your stock price with these new assets coming online? Is it very dependent and kind of moves right along with the new announcements of when these new assets come online, when these new investments are actually starting to bring in gold?
That's a good point because, and oftentimes, that is when you want to look at these equities. When companies are coming close to the conclusion of the build process or the investment process into a new asset, and then there's that inflection point where the asset goes from not producing and a cash draw or drain to then starting to produce and starting to generate really positive operating cash flow. So it's a significant inflection point. And with Equinox, we have two in tier one jurisdictions in Canada. So it is a significant point in time. And I'll give you an example, a company who's recently gone through this, two actually. One is called IM Gold. They've gone through a re-rating as they delivered a new mine in Ontario, as has another company called Artemis Gold, which is a company in British Columbia, Canada, that has gone through a re-rating by birthing another new large Canadian open pit gold mine. So we're in that process. We're in the kind of the trough, if you will, at the base of or at the end of the investment in the construction. So it's an exciting time, and those re-rates can be significant as we, particularly in an environment like this where gold is trading at almost all-time highs.
And let's talk about timeline. When are these new assets coming online? And for investors, what does that mean? When is a good time to get in before your stock might see a boost because of these new assets coming online?
Yeah, so a couple of things, and I think it would be prudent for me to say they don't always go completely smoothly. We're talking about multi-billion dollar investments into these large plants and mines and operations, and you're mining, digging, and producing this metal through this plant. So there's a lot of complications that go into it, a lot of engineering, a lot of detailed work that goes into this. Um, and so they don't always go completely smoothly, but they do eventually work their way through that process of understanding the hurdles, the challenges, solving those solutions, solving those issues with appropriate solutions to unlock the value. And I would say here's an example. Greenstone, for example, is this mine in Canada. It had first gold last year, Q2 of last year, and then declared commercial production in November of 2024. We're still in the process of ramping this up to the nameplate capacity. And so the market is watching this as it unfolds. I would anticipate by the end of this year, we're starting to hit nameplate capacity of the milling rates, of the mining rates. Okay. So that should start to unlock value for shareholders as they see that unfold. And number two, our Valentine gold mine is just finishing construction. So we're going through this process of commissioning, and we would anticipate first gold by the end of Q3. So if that goes smoothly, and we're on track for that to go smoothly, right? If that goes as according to plan, I would anticipate that re-rating process starting to unfold in Q4 of this year. And I have to caveat all that is that with the price of gold's movement, that will either hinder, the re-rate opportunity or enhance the re-rate opportunity. So let's see how that unfolds. Look, I couldn't tell you where the price of gold is going, but there's some pretty sophisticated banks out there that do believe that we're in this higher gold price environment for a period of time. I would anticipate that that does continue through 25 and 26. Given what we're seeing on the sort of geopolitical and particularly central bank buying environment, I think that the gold price should remain fairly robust for this period of time.
Well, that's a great breakdown of your company and where the gold market stands right now. I do want to end this video with one last question, and that's just a broader look at the global economy. Any thoughts about the US stock market reaching all time highs at the same time gold is reaching all time highs, at the same time Bitcoin is reaching all time highs? What does that mean when these three different, types of investments are all really robust right now?
That's a that's a loaded big question.
It might be too big. It might be too big, but it's one of
I
my
would
first thoughts.
I would actually logically think, I mean, everyone is looking for increasing GDPs. How do you do that? You do that by reducing rates, looking at different quantitative easing products to put more money into the system, more money to work. So I can't see anything slowing down. Maybe you get some hiccups along the way, but it just seems to me that the world is all about growth and reinvestment and continuously keeping that money supply going. And I think it's a dangerous thing, though, nonetheless. But I don't know if it ever catches up to us in our lifetimes. And maybe it will, and maybe that will be a big reset, and that's possible, right? I mean, you if you follow Ray Dalio, and I'm sure he's been interviewed many times, and he's been talking about this, reviewing the history and what happens within these debt cycles, and it's a dangerous game. So let's see what happens.
Yeah, that question and that debt uncertainty is undoubtedly one of the reasons we are seeing so much investment in gold right now. Thank you for answering that question, Ryan. I know it was a big one, and sharing more details of that big Equinox merger. If you want to learn more about this stock and do some research for yourself, we have a link to that stock chart page on marketbeat.com right in the description of this video. Thank you again for watching today, everyone. And we'd love to hear from you. Are you interested in gold mining stocks? If so, tell us which companies you're following in the comments. We'd love to keep that conversation going. Thanks again for watching, everyone. And as always, happy investing.